Welcome back to my channel, guys. Today I'm going to review the Octopus Network. So this is a top-down view. You can see that you're not new, that you're relatively new with social media, meaning it's not something that's got high numbers with social media awareness. Its price action is somewhat conservative. Its token metrics are pretty good. It is a little centralized in that you depend on the team to deliver in order for it to be successful, but it is making the migration to become more decentralized with a community-run project. So there's that to consider. The team is Chinese, so it was a little more difficult finding their backgrounds, and so that's just a general overview. But so what does this project aim to solve, or what is this project going to, what market is it going to serve? In a general sense, this project is a distributed web of computers, or blockchains. And what it offers is flexibility, security leasing, which means that compared to, let's say, this project's very similar to Polkadot or even Matic in some ways, in that it'll have different teams delivering their application on their own blockchains, but the blockchains are built in a way to where they can communicate with each other automatically, where they can bridge between each other, and they will have all that toolkits set up by default, but they will have their own blockchain with their own internal logic and their own self-governance, meaning that they could run their app chain with their own rules. So, but it has flexible leasing. So the major difference between this project, just from a general flyover, compared to Polkadot, is that this one aims to be cheaper in allowing for people to launch on top of them, or easier for people to launch their apps on them versus Polkadot. It has this thing called app chains, which are application-specific blockchains. That's what I was mentioning before. It's the main product that's offered. That is basically just anyone who wants to launch an app. They'll be able to do it on their own specific blockchains with, these toolkits that they build out. They have substrate derivatives. So if you can program on Polkadot, you can program on this. You can migrate your project here if you wanted to. And those will be things that you'll be capable of doing. On-chain governance on the app chains. So each app chain will have the ability to, the app chains will be able to have their own logic. It's built on the Near protocol with inter-blockchain communication protocol enabled, meaning that these applications will be able to intercommunicate. Now, the fact that it is on Near protocol, that could be considered a risk or a benefit depending on Near's adoption, but it is more dependent on Near because it's built on Near. And it doesn't have its own security because it is on the Near protocol. So those are things to consider as well. So that makes it cheaper in comparison to Polkadot because it's already on top of the Near protocol. But it does have some dependence on the success of Near. And Near is an interesting project. That means there's an additional risk in that Near kind of needs to be adopted. But even as long as Near's around, this project will be around. It's built on Near, so it's just dependent on Near. Affordable Polkadot alternative. That's basically one of their sell points. Unlimited scaling as the shards on Near, as opposed to 100 parachains of Polkadot. Now, that's a criticism that I, from understanding Polkadot, I know Polkadot will actually have more than 100 parachains, as per Gavin Wood, the latest talks. And also, I don't think Polkadot's all that going to be as expensive as it has been. As you could see that it's already down 90% in costs in terms of getting a parachain slot. And I actually think that's going to go down another 90%. So it's going to cost 1% as much as it used to in the past. So I actually think it's going to get rather cheap as time goes on for projects to get those parachain slots, especially as those parachain slots keep running and more slots get filled. Eventually, there's going to be more slots than there's even people applying for them, which will make the supply and demand. The supply side will go up. Therefore, I expect it to be rather cheap to launch on Polkadot. So this sell point isn't that strong, in my opinion. Desirable, in the long run. Right now, Polkadot is still more expensive. Desirable applications that desire their own blockchain with low fees, capture value to users. That's one of the logical setups for this, is that these applications are going to need to pay for their spot on this project by paying validators, and thus they will have to justify their existences on this project, etc. Compared to Polkadot, Cosmos. Oct is built around, on the existing Near protocol. This makes Octopus very... So yeah, like this is, so another way to think about Octopus Network is it's very similar to Matic. Is as Matic or Polygon is to Ethereum, Oct is to Near. It's very similar to that. It's not a layer 2, but it is built in a similar way in that it's built on Near, and it's giving that interoperability bridge ecosystem type architecture. So, like Matic is like what, 1/10 of Ethereum or a little bit less. So maybe this might have the market cap of 1/10 of Near, which would still mean it would go higher than it is right now. So why Near? 10K lines of code, that it's a complex, Rust, WASM, etc. They said, like they didn't have any, like Near would be, it can handle any computation, so that's one of their justifications from their interviews. App chains pay validators in the native token and thus need to convince a community of the value of their application. So the community is what creates value to these app chains, in that they need to have value in their app chain tokens in order to be able to pay for security from Octopus Network. So like they need to convince some people to buy their tokens, to give them funds so that they could pay for validators from the Octopus Network to support this blockchain, this app chain, etc. So they have to convince users that they have value and that they will have a model that will run, etc. Okay, so some of the app chains that are on it is a Bio Network app chain and DBell Network, decentralized biometrics, which is biometric data marketplace. However big that'll be. I'm in biotechnology. I personally think that like this, the scientists and stuff will be trying to get these data sets, and it's probably not going to be super large, at least for now. But in the future, it probably will be. I don't know like the market size of it exactly right now, but biometric data. It's basically it is going to get more and more valuable as more and more people sequence their genomes. That data is going to be incredibly valuable. But how companies are using it, etc. Those marketplaces need to be set up, etc. But full genome sequencing is coming online. It should get relatively cheap pretty soon. I think it's like $500 now. Eventually, it's going to get down to like the hundreds of dollars, and it will be up to like the public to fully sequence genomes. And I think there will be a lot of models that will come from that. That's just my personal opinion. But it depends on the public's understanding of this. The public has to understand how valuable biotechnology is. I mean, in the long run, biotechnology could, I'm going too much on a tangent here, but this marketplace could be valuable. Okay, so DBell Network, decentralized social media. Social media is difficult to be successful at, but those are the two of the app chains that they mentioned in the interview. Okay, and then finally, validators are app chain specific and do not rotate. So that's another thing that they said. I'm personally not a fan of that. I like the rotational aspect of Polkadot's validators because that means that it protects them from being attacked. If you know who the validators are and you got a low market cap, that means that there might be some attack vectors that can exist by knowing the identities of validators, etc. But maybe I need to read more into that to make sure that I'm understanding that right. In Polkadot, the validators do rotate, so you don't know which validator is servicing the parachain because they rotate. P2E cash flow represented on staking from the app chain cash flow. So this is important. This makes this project easy to understand. Its evaluation is that whatever the cash flow is from the app chains can give you a P2E cash flow. So Ox market cap, the Octopus Network's market cap is derived from the cash flow from app chains. And so that is something that's interesting there. So that means we can calculate actually the P2E. We can calculate what the market cap should be. So with a $10 million cash flow, a 200 million market cap out of 20 P2E is justified. And that's roughly what it's at right now. But the cash flow is around 100 to 200K. So it's, like it would have to 100x. It's, but like that it's at roughly 100K or 200K cash flow right now. To get to 10 million it's a lot easier to get to 10, or where it's at right now, it's so small with cash flow that getting to 10 million shouldn't be that difficult. Getting from something from 10 million to a higher amount, that's going to be more difficult. And if you want this thing to, do well, that's what you're believing, is that it will get up to levels beyond 10 million cash flow because it's priced at a 10 million cash flow right now. Regarding these things right now, the token security network, basically the OCT token holders are the app chain validators, and they pick them, and they are the ones that vote. They vote on which app chains they want to be in the ecosystem. And so basically, you don't really need to get all this stuff. It's just the token holders vote for the app chains that they want to be in the ecosystem, and thus they are kind of like venture capitalists, and they vote for, like giving those validator resources to those app chains, and they're the ones who give them value. So let me really get into this from the model. All right, so future increase in demand for token, I think that could be the case. You are, oh crap, this app automatically switches to eraser, which I'm not a fan of. Okay, so you are early to social media. Regarding its timeline, I think that you could see price action around the 6-month to the 12-month, because they're going to finish DAO version 1, which is making it community run. And they're also going to have the Cosmos Bridge inter-blockchain communication done in that time, as well as more upgrades to the DAO in the later parts of the year, and a Polkadot bridge before the end of the year. And these things should be done by, within Q3, Q4. So maybe it can get hype around that time. I said 6-month or 12-month might be interesting times from now. So that means, 4 months from now or beyond, around the halfway point of the year to the end of the year, you can see price action if they deliver this Cosmos Polkadot bridges, and when it goes to a DAO, when it becomes a community run, that might lead to price action as well. So we can expect price action. We're in March right now, so maybe in 3 more months we could expect some price action if they deliver. And maybe developers typically deliver later, so maybe around a 4 or 5, 6 month time horizon. All right, so regarding price action, it's performed like average crypto. So price action has been pretty average. Low market cap. It is not really a low market cap. I mean, it's circulating is around 50 million, and its dilated is around 200 million, and price is around $2. So it's not super low market cap. But regarding its, it is a pretty low market cap, but it's, I like things that are even smaller than 50 million, etc. Dividend irrelevancy. So what this is that staking does return. So it's a dividend from staking or the app chains through stakings. You get a PDE based on the total value of the economy. So this thing is tied to the success of the apps that are on it. Therefore, it is like owning a security type instrument. Therefore, it will have a PDE. They will have dividends. So it doesn't matter. If 1% of those tokens are distributed, because it has those earnings the earnings per share that you're entitled to when you own it. Therefore, it doesn't matter how it's distributed. Inflation doesn't matter, and it is non-inflationary, which is another good thing. But it's kind of irrelevant. These are bullish things for price action, because you're entitled to whatever growth they get in returns. So if they're successful, if they get cash flows, you as a token holder will be entitled to that. It doesn't matter if you own 1% or if 50% of the supply. So, that's that. Regarding design of decentralization, right now the governance is mostly the core teams, etc., but it will move to that version 1 of the DAO. When the DAO is implemented, it will be more like a medium decentralization, and as time, it might even go to the high decentralization. All these things were kind of difficult to determine because they were a Chinese team. I mean, I watched their interviews and stuff, but it's basically you can tell what the vision is. It's a competitor to Polkadot. It's a Matic to near. It's like as Matic is to Ethereum, as Polkadot is to the general space. This is a general interoperability play environment type of project, with its aim being that it's cheaper than Polkadot. Extremely, like I put the extremely important that the CEO requires trust, etc., etc. So regarding what about the team, the CEO is Chinese based. He said, in his interviews, now this is from the developer, so it was hard to find information from other sources talking about him, which is generally where I like to get information. But this is his personal statements. He has 20 years as a developer experience in enterprise information technology, big data. 2013, he was buying in the crypto. Now, his validation, mostly for me, comes from, he shares valuable information. He's straightforward. And, he's understanding, he understands the technology. And they were getting grants from Cosmos and from Polkadot, etc. So those grants are validations of their ability to deliver. And that's the most trustworthiness that you can go off of right now, is that they were getting those grants. As far as their history, there's no LinkedIn or anything that I can find, because it's Chinese based, so it's harder for me to find that information. Or it doesn't look like they have any big, huge wins in the past of creating huge billion-dollar entities, but they do have that developer experience. And so the one thing that we're going off of here is, will they continue to work hard when things are tough, when things are boring? Will they keep working? Will they work for years? That's difficult to tell because this project is relatively young. So those are the risks associated with this. They might give up. They might not stick to it. Those are things that you have to be concerned with. If they deliver version 1, you can care a little bit less about whether they're going to stick to it, because now it'll be more community run. And if it attracts other attractive developers, then it won't matter as much what their record is. But because they have to deliver these valuables, we hope that they will keep to work and deliver. And even if times are hard, even if, we're in a bear market, etc., that they keep delivering. I saw, I think his name is Andre Kane, or some other developers quit recently. That is terrible, guys. They basically dumped on your head and left. Developers should work hard. You want to invest in people who are going to stick with it through thick and thin, and they're going to deliver on their promise. That's why you typically want promises to be clear, and you want someone with a record of delivering certain specific goals in the past, so that that they're going to deliver the goals. So, those are all things to consider. So high value upgrades, developer motivation. They have funds to get people involved with developers, the developer experiences on Substrate. So all of those things are good. So I expect the value of services to increase. User experience will be good. Network effects should be good. As a capture developers, they have a lot of incentives to get developers involved. Large business models, it's a decent structure for business models, so I think that there will be business interests. Didn't see any major onboards for it. Moat, external, I didn't see anything that was super protective of whatever it captures. Best option of the competition, I wouldn't say so. Flywheel, it will have a flywheel effect. That is Metcalfe's law. So if they do capture to get very successful applications on them, then that will in turn create a feedback loop and deliver value. So it could get exponential returns from that. Head-to-head project leaders, that's not relevant for this one because it's too small. First mover adequate incentives. It's not a first mover. They do have incentives to get people attracted to the application. So I put all these things as neutral. Tokens per person, tokens on the sell side to decrease money needed to make price FOMO. I put it all as neutral because it's priced as if it has 10 million cash flows. It roughly has around 100 to 200K cash flows right now, but it's priced at 10 million, meaning that the market expects for it to reach that 10 million. Now, if it gets there, it would probably go up in price as it got there, because now the market would look ahead and say, yeah, it's probably going to go more than 10 million. So those are things to consider. But right now it's priced at 10 million cash flow, and it's got a roughly between 137 and 200,000 cash flow. So I put it as neutral because, it's too small to say that it's servicing a good market right now. But it is live. It has mainnet, etc. There's no fees that burn tokens. All right. As far as the use cases for the token itself, the token metrics, token is used for security, the leasing security. It's going to be for governance soon. And app chain validation, which means that users pick which applications that they want to be servicing validators to and getting those returns from those applications. And they're basically assessing whether those app chains will be valuable in the future. Staking income from app-chain activity. So it gives you the PDE. It is entitlement to whatever the success of this platform is in the future. So that is, so yes, it is a valuable token model. It is good. It has good token metrics. And that's a jet flying by. Military practices have been going up. All right. Value of target market is large. Timing. So yeah, the market is it's a very large market. 400 trillion market opportunity. This thing is, you know, like 400 trillion. That is huge. You know, maybe like this project will be successful just because the whole world is going to move on blockchains, and that's why I'm in this space, because blockchains are going to service the entirety of the world's economies. And when I say 400 trillion, I mean that in the sense that these type of infrastructure plays, which Octopus Network wants to be, that's what Near wants to be, is infrastructure. Infrastructure is like the roads, the foundations for the future of the entirety of financial, plus other things. So yeah, that's a pretty big market opportunity. The infrastructure of web3, you know, it's the infrastructure of all financial activities in the future. That is what it's generally serving for, infrastructure. And that is one of the things I like to invest in generally, is infrastructure, because that's where we're at. We're in the 90s. The analogy goes, we're in the 90s as the 90s were to the internet revolution. We are in that kind of stage right now with crypto. Crypto is still not fully understood by the majority, and you know, and that this is going to be what runs humanity if we don't nuke ourselves. All right, so finally, the final summary. Low market cap with accomplished CEO, I put no. Early to social media, I put yes. Live niche, it is, you know, live. It does have some apps. It has a mainnet, so I put yes, even though it, you know, it has to prove itself more there. All right, pros, relatively small market cap, extremely large addressable market. You know, this is an infrastructure, so that's good. Low hype level, so that is good too. So you know that you're buying this at a relatively fair price because it's not have this crazy hype on it. That's always good. Cons, team commitment record. It's difficult to tell if they're going to be persistent. High expected PDE, you know, it's already priced in to be at a 10 million cash flow, which it is not at. It's pretty much at zero with 100 to 200K. That's pretty much zero. You know, but it did just launch, guys. So, you know, get over time, this thing could definitely get up to that, you know, 10 million easily. Getting some application, getting some service provided, etc. It does depend a little bit on Near success to some degree, so there's some extra risk there. Only time can tell if their determination will stick over time because it's a young project. All right, that is the summary. All right, I'm going to get into Patreon next. But if you like this kind of content, guys, please like and subscribe. I try to be as unbiased as possible. I try to deliver the most valuable information on projects so that you can personally judge whether you think it's good or not for a long-term hold. You know, because fundamentally speaking, that's how you capture the most wealth, is by investing in something and capturing the value added from committed work and growth of a project over time. All right, next is Patreon. All right, later, guys.